In an era marked by economic fluctuations and the ever-present threat of inflation, strategic financial planning becomes paramount for individuals seeking to safeguard their wealth and maintain long-term financial stability. This comprehensive guide explores 10 key strategies to navigate the challenges posed by inflation, ranging from diversifying investment portfolios and embracing dividend-yielding stocks to leveraging inflation-protected securities and real estate investments. Diversify your investment portfolio. Diversification involves spreading your investments across different asset classes to reduce risk. Stocks, real estate, and commodities are often considered because they tend to respond differently to economic conditions. For example, during inflation, real assets like real estate and commodities might appreciate, acting as a hedge against the eroding value of currency. Stocks with dividend growth. Investing in stocks of companies with a history of consistent dividend growth provides a reliable income stream. Dividend payments can act as a shield against the effects of inflation, providing a steady return even if stock prices are volatile. Companies with a track record of increasing dividends may indicate financial stability and strong performance. Inflation-protected securities, tips. Treasury inflation-protected securities, TIPS, are government bonds designed to protect investors from inflation. The principal value of TIPS adjusts with changes in the Consumer Price Index, CPI, ensuring that the purchasing power of the investment remains relatively stable despite inflation. Review and adjust budget. Regularly reviewing and adjusting your budget is crucial in times of inflation. Focus on essential expenses, prioritize needs over wants, and identify areas where you can cut discretionary spending. This proactive approach helps ensure that your financial plan remains resilient against the impact of rising prices. Real estate investments. Real estate, whether through direct ownership or real estate investment trusts, REITs, can be a valuable inflation hedge. Properties often appreciate over time, and rental income can increase in line with inflation. REITs allow investors to gain exposure to the real estate market without owning physical properties. Emergency fund. Maintaining a robust emergency fund is essential for financial security. This fund serves as a safety net, covering unexpected expenses such as medical emergencies or car repairs. Having this cushion can prevent the need to liquidate investments or accumulate debt during challenging economic times. High-yield savings accounts. High-yield savings accounts or short-term investments offer higher interest rates than traditional savings accounts. While they may not completely offset inflation, they provide better returns, helping your money grow more effectively than in standard accounts. Negotiate and shop smart. Negotiating prices and being a savvy shopper can save money in the long run. Whether negotiating for a big-ticket purchase or taking advantage of discounts and loyalty programs, these practices help maximize the value of your money and reduce the impact of inflation on your overall expenses. Career development. Continuously enhancing your skills and advancing your career can lead to higher income potential. A strong skill set makes you more marketable, increasing the likelihood of career growth and salary advancements that outpace inflation. Manage debt wisely. Refinancing high-interest debt can reduce the overall cost of borrowing. While inflation erodes the real value of debt, it's still important to manage it wisely. Avoid taking on new, unnecessary debt and focus on paying down existing debts strategically to improve overall financial health. Adopting a multifaceted approach to financial management is imperative in the face of inflationary pressures. By diversifying investments, optimizing budgets, and strategically navigating debt, individuals can fortify their financial resilience. Embracing these strategies not only mitigates the impact of inflation, but also lays the groundwork for sustained economic well-being and a secure financial future.